What's cooking, Gumbo Nation? Got a good show planned for you today. War is a deal near. FICO scores. Got some great news for you. New Fed chair. What's that going to mean? Stick around. What's cooking, Gumbo Nation? You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio, and I'm your host, Dwayne Stein, the Gulf South Mortgage Authority, and this is your home show where for 11 plus years we've been providing education and options on what is or will be your largest investment and most valuable asset, your home. Hey, if you're new to the show, welcome to the Gumbo Nation. Think you're going to enjoy it. We keep it real. We only talk facts, but we do it in a fun way, and the only way I know how to do it. And that's just to be straight up and direct. Hey, the home away from the show, 504-207-7600. Or if you want to send an email, shoot it over to info@mortgagegumbo.com. Or you check out our website, mortgagegumbo.com. Hey, just Google Dwayne Stein. Hey, go check out all the reviews. Something about y'all are amazing, Gumbo Nation. Again, shared a couple weeks ago, being in the top 1% in the entire country, and it's all because of you. So I just want to say thank you. Also, thank you for all the birthday wishes. Big double nickel this past Monday turned, so appreciate all the nice people taking time out of their day to shoot me emails and all that fun stuff. Means a lot. It's why we do it. This is for you. So, lots going on. Hopefully this rain gets out of here. We got, Jazz Fest, Zurich, last weekend, French Quarter Fest. This is what makes this area. We're in festival season right now. You got draft, NFL draft going on if you're into that type of stuff, but really, really fun times, fun things going on. Jazz Fest again next weekend. I'll be heading out there. So if you see me, make sure buy me a beer, man. Please. Be more than happy to accept that. So on the show today, we're going to be talking about, main topic is going to be about what are your safety nets? Over the last couple weeks, we were taking you through the home buying journey. We started with the pre-approval process, broke down in detail the application. Then what is it like when you're going out looking for the house? Then you're under contract all the way through your closing. Well, now what I want to tell you about is what are those safety nets? What are your outs? Right? So when you're buying a home, we want to make sure that we're protected, right? We're spending money. So today what we're going to be discussing is we're going to be going through and we're going to be breaking down and talking through contingencies. What are your and we are going to go detail by detail on what these are because it's very important that you are protected. Right? This is a purchase agreement. It's a legal contract. So we want to make sure that we have all that in there and it's all done properly and correctly. So we're going to make sure that we are showing you all of that. All right? So, but also got some existing home sales numbers, pending home sales, the war, your questions. We'll get to all of it. And is a deal near? What effect is it having? The new Fed chair. But what I want to start with is I think some good news here. And if they finally get this put in place, they've been talking about it a lot, and they finally got the GSEs, which is the government service entities. That is Fannie Mae and Freddie. They finally got them to agree. This past week they announced. And they are going to be rolling out where they are going to start accepting the Vantage 4 scores. And I think FICO, it's time for them to be gone. And that's just scoring models, right? There's thousands of them, yet for some reason we use what FICO has. And not to go, well, a little bit of history. FICO was set up, and they had a 30 or 40-year contract, all kinds of crazy stuff that ended in 2018, I believe it was. And let's face it, just like everything else, right, is the monopoly finally over? Because over the last 5 years, credit bureau scores and credit bureau costs, not scores, but credit bureau costs have gone up over 1,800%. So, and those are then given down to the client, right? And there's a cost of doing business. Now, I don't charge up front for the credit bureaus. A lot of lenders do. But those costs have gone up 1,800% over the last few years. And I think when you look at that, there's some things that's got to be done. And then you got the credit bureaus that are part of FICO, TransUnion, Equifax, and Experian. Well, they've gotten a little greedy. Because you could go back and listen to my show when it started over 11 years ago, and then the years before that being on Winning at Life with Gregory Ricks. We talked about Credit Karma and all these things and how it's important to monitor your credit. When these guys started selling your information to every Tom, Dick, and Harry out there, and you're getting blown up. Now, in March, they finally passed where when it comes to mortgages and servicing, like they can't just sell your info. So if you come to me and pull your credit, they were selling that information out to everybody, which is bananas to me. Absolutely bananas. So they stopped that. But I think there's got to be other options. And what I like about the Vantage score is it takes into consideration, it'll evaluate rents, utilities, not just loans, credit cards. And look, I do webinars. I just did one all about credit webinar a couple weeks back as part of our Home Buyers University. But it's more of giving an advantage of by using rents, right? Maybe utilities. It's not necessarily a snapshot, but it's more trended data. And this is especially going to help for first-time home buyers. Somebody like me who's been in the credit system for 30-plus years, you already have that trended data, right? You already have enough proof to show your ability and willingness to pay. But for younger home buyers, you know, who's like, hey, we're not getting out there. We're not going to open up a bunch of credit, but we pay our rent. We pay utilities. This is going to create some opportunities. Now, what they're talking about is they're going to pilot it with, 20 lenders. Hey, I'm hoping us, being a number one retail lender in the country, we're one of those. So stay tuned. We'll keep you posted on that. I think that'll give us a great advantage. But you're looking at, according to the numbers and everything I'm reading, it's another 5 million buyers become eligible on what they found. Now, keep this in mind. Lenders are still going to set scoring preferences, right? We talked about last year how now Fannie, you could go below a 620 now on a conventional loan and all that. Yeah, you can. But you're not going to want that rate, right? So there's a lot still to uncover here, but I like it. I don't think FICO should be the only show in town. Now, we've already talked about, we talked about this a couple weeks ago, and you can see all the reports, hey, we're 10 million houses short, and we'll talk about existing home sales and all that in a second here on our next segment. But 5 million more people will hit the market, will be eligible. So let's just take a step back. This is great information, right? What do you think 5 million more people entering the market is going to do on top of all the pent-up demand of everybody that's been waiting? What do you think that's going to mean? A, home prices will get cheaper. B, home sales will go down. C, none of the above. Or D, it's going to create competition. Or E, both C and D. Well, if you said E, you're right. Because what is going to happen is competition is going to increase. Home prices are not going to go down. And it is going to cause more people to come into the market. If all of a sudden you thought as a first-time home buyer, and they're doing this because they just don't like the trends of first-time home buyers. And look, the costs, right? Expensive. How much can I afford to buy a home? They're doing this to try to get things moving. And that is why, and the data shows it, that is why right now, even with this war going on and all these things, we're seeing purchase agreements. Because with today's rates, you're still going to refinance down the road. We're not giving out 4%. So unless you're coming to me and you qualify for a 15-year term, and I'm going to show you how to biweekly it and amortize it and pay it off in 8, 10 years, where the rate really is going to have no effect, then you're going to refinance. So that's why at Mortgage Gumbo, what we're doing is we're focusing on how can we get you in this house as cheap as possible. You got 20% to put down? Great. Let me show you what it looks like if you do 10% and hold on to that money right now. Here's what the difference is. Now, bank of mom and dad's giving you the money, cutting a check. Cool, let's rock. But there's a lot of you first-time home buyers who are sitting on the sideline, and that's why I think this credit scoring, this new Vantage scoring, when it rolls out, not just, let's hope it's not just a headline, like let's start applying some of this stuff, is going to open up some competition. But that doesn't mean home sellers are going to go, oh, good. Another 5 million people enter the market. Yeah, let's give this house away. So keep that in mind. That's why a lot of folks right now are winning. I'm seeing it. I'm helping people with it. There's a way to win. There's a way to get the right price. There's a way to get some seller concessions. And everybody's happy. It doesn't have to be this gigantic tug of war. And if you're listing your house, which, by the way, Mortgage Gumbo, we can help you. We're helping several of you right now. If you've trusted me for 30-plus years lending, we can help you with listing your house as well. Just reach out. Go to info@Mortgage Gumbo or call the office, 504-207-7600. We can help you in your market. We're doing it right now, big time. Let us help you list your house and buy that next house. But what you're seeing is this competition, and people are writing contracts, and everybody is winning right now. It's a good for everyone. Even with the war, even with some of those things going on. And we're going to talk about that on the other side of the break. But let's go. Bring on that Vantage score. Let's get rid of FICO being the monopoly. All they want to do is sell your information. Think about how much junk you get, how much stuff you get because you want your once a month free check and all that stuff. It's crazy, and it's time it all goes away. All right, don't go anywhere. You're listening to Mortgage Gumbo with Dwayne Stein on this beautiful Saturday. 504-207-7600. Shoot an email to info@mortgagegumbo.com. Welcome back. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeartRadio. Hey, if you want to join the show, 504-207-7600. We always got somebody on standby. Shoot an email to info@mortgagegumbo.com. So this week, the Fed meets. Don't expect much. The new Fed chair is kind of having his interview process go on right now. Kevin Warsh. We've dropped the lawsuit on Jerome Powell. I say we, meaning the United States, which, look, just drop it. I mean, if he stole money to make the building and overspent by $3 billion, I mean, who cares? They're not arresting anybody for fraud or anything like that. If we got to drop that so he'll leave, goodbye. He's cost us a lot more than $3 billion anyway. So, you know, some of the highlights that I like with the new Fed chair, look, we need something. We need somebody. I've been saying for years, since these folks Yellen and Powell got in, is we need somebody that's forward-looking, somebody that looks at the underlying data and sees it for what it is going forward, right? There's no sport you play where when the pitch is done, the ball's thrown, the puck is struck. I don't know hockey terms.
Dropped?
Yeah, there you go. The basketball is shot. Nobody runs to the player that just did it to defend it. They go to where the ball's going. They go to the net, the basket, where the ball's been hit, where the ball's being thrown, or the runner's running to make the tackle. This Fed for way too long is too backwards thinking. Oh, that's what happened. Okay, now let's make a decision. And what I like is I think it's going to be no more boom or bust. What I like is he said, you know what? Too much airtime. All these Fed, well, he's the Fed president, but all these governors, Fed governors, and all this stuff, it's too much airtime. We shouldn't be that important. Everything shouldn't be, as I stated earlier, boom or bust. They're 15 minutes of fame. I mean, do you realize they're still using measures for inflation and data? And we talk about the BLS, remove the L, what is it, right? From 1985. And, you know, one of the things he wants to do is, it's called trim mean. And what that means is, it's like grading a school, right? Throw out your highest, throw out your lowest. And this way you get true inflation. You don't have no one-time price shocks like right now with oil. Well, that's happening right now. But why is that going to be a determining factor on the good stuff that's been going on over the last year? The GDPs, all those things. So this week the Fed meets. Don't expect much. They're not going to lower the federal funds rate. And then hopefully Warsh is confirmed in May. They'll have enough numbers now that we drop the one senator or congressman, whatever they are, worthless, was holding out. And now he'll get confirmed, should take over in May. Powell should be gone, and we'll start anew. Now, look, I talk to folks all the time, and they're like, well, and again, it bears repeating. You know, the Fed president coming in or whatever, they're not going to just drop rates, right? But what you've got to look at is that's the federal funds rate. That's going to help with your credit cards, maybe auto, short-term rates. Your checking account, right? You probably see your checking account. Maybe you're not getting those CDs, aren't paying what they were, right? Because the Fed started dropping some of those rates. So we'll see what happens with that. It'll be interesting. So is the war near an end? I don't know. We're going out there again this weekend. Who knows? Is it having an effect on housing? Well, it depends on what you read, right? So March sales fell 4% from February. February is a great month. Lowest since July of last year. And a lot of this had to do with rates. And I think once this gets settled, you're going to see a shift, and you're going to see it very, very quickly. And the reason why I say this is first-time home buyers was at 32%. You still have selling above list price is 18%. Let's just use round numbers. So that's 1 out of 5 houses is still selling above list price. That does not mean in your neighborhood, right? Real estate is local, but 1 out of 5. National Association of Realtors adjusted their what they said, their expectations of existing home sales to increase this year annualized by 4%, down from 14% in January. I think that's panicking. I disagree with that. I think when you look at it, and I could just tell you what I see, right? They were either projecting or maybe wishful thinking. But I think once this war ends, you're going to see a surge because that's what we were seeing. And I'm going to share some numbers in a second that show that it hasn't necessarily slowed down. That's why you gotta be careful what you see here when you go, oh, okay, existing home sales, March sales fell. Well, the war didn't start till February 28th, right? So if March sales fell, did people, maybe they didn't get locked in, so maybe they backed out. We know the amount of homes that people are backing out of, right? Because some of them sellers, little lipstick on a pig there. But what you still have is you still have the buyers that are pent up. I see it. I have them pre-approved. And this week, folks who 3-4 weeks ago were like, hey, I want to put everything on hold. You know what? All right, I'm ready. Now, existing home sales, listen, that is the driver. So I pay attention to existing home sales. Remember, there's 2 types of home sales. You've got new home sales, which is new construction, nobody's ever lived in it, or existing home sales. Somebody slept in that house before. Somebody's flushed that toilet before you. So when you look at in March, pending contracts were up. And this is even with the war. And I look at my area. I look at what I control, right? I come to you going, hey, I get to see this. And being in the top 1% of loan officers, I'm doing volume. Winners hang out with winners. So be weary of the media. Don't fear the reaper, so to speak. It's a great song, by the way. Because home contracts are up. Now, what you've got to look at is if you go look, and I kind of agree, new home sales, that's a whole different ballgame. Because what happens with new home sales? I'm working with several people who are doing construction loans. Look, you got to get a permit. Then you've got to, from there, you got to get the permit. Then you've got to get the, start everything going, these builders. Well, their confidence is down right now. Whereas a new existing home, boom, put a sign in the yard, let's sell this thing. You got up and ready to go in a week. Takes a little bit more with new home sales to get that engine going. It's like a train leaving a station. It takes a little bit before it gets going. So existing home sales is what we're keeping our eyes on. But again, home price appreciation up almost 3%. I'll take it. I'll take it during these times. Real estate is a win. All right, don't go anywhere. On the other side of the break, we're going to knock out some Rate Watch. Talk a little bit about that and your safety nets. We're talking contingencies. So don't go anywhere. We'll find you. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeart Radio. Welcome back. Hey, if you're heading out to the Zurich or Jazz Fest, have a great time. Enjoy. This is the beautiful time of year around here. All these festivals going on. Probably going to head over to the Gulf Coast, hang out over there. Some fun stuff going on there as well. Hey, home away from the show, mortgagegumbo.com. I'll shoot an email to info@mortgagegumbo.com. Or always got somebody on standby, 504-207-7600. Hey, I'm a home wealth advisor. And because of you, hey, nationally ranked, locally ranked, all because of you. So appreciate that. Got a question over the break. What is a arm's length transaction? Great question. So there's two types of transactions when you're buying a home. Okay, you have what's called an arm's length or a non-arm's length. So what an arm length transaction is for Chris, that is and this is a majority of what each of us do when we're buying a home. And an arm length means there's no relationship with the seller or between the buyer and the seller. That's an arm's length transaction. Think about it. Like you put your arm out, right? Like, I don't know you. That's how I explain it when I'm training folks and doing classes. And non-arm's length transaction, it's somebody you know, a relationship, somebody you're familiar with. So non-arm's length, hey, somebody you can hug. Get a little bit of warm and fuzzy when you're around them. So an arm length is a majority of what we do is no relationship with the seller, between the seller and the buyer. And a non-arm's length is there's a relationship. And a lot of times with the non-arm's length, hey, we're doing gifts of equity, sellers paying closing costs, different things like that. So great question there by Joe. All right, let's get into our weekly segment we like to call Ray Watch. All right, folks, still hovering. Hopefully something breaks, and I think we'll start to see these things come back down. We saw it start to trend in that direction. Conventional 30-year, 6.32, 15.591. FHA, same, high fives. Jumbo, 6.5. VA, high fives. 10-year Treasury is sitting at 4.303 right now. So, you know, look, when this thing busted out, just to give you an idea, right? I mean, literally, that Saturday came on the show. When we hit 599, that Treasury was down, all the way to 3.954. And then, boom, later that evening, Epic Fury started. So, and we've been battling ever since. So what we got to do is we got to do like I'm doing for so many of my buyers. And this is what you deserve. And if you're listening, you go, this is why you got to call this guy. We got to figure out, okay, how do we control the controllable? Right? That's what my job is to do for you. Let's control the controllable. Right? We can't worry about what things were before you were buying last year or in 2019 or any of that stuff. We can't worry about that. We got to control what we can control right now. And that's what we do for you. We're going to try to find, hey, what products are available so the rate's not as much of an effect for you. Look at maybe some down payment assistance programs. We'll see what those things are. But we've got you in mind. Am I sitting around going, gosh, can this thing get over so I can afford to fill up my gas tank? Or more importantly, my son's? My lawnmower? Like, do I have to plot out when I'm going to do gas? Do my lawn? So But we're not going to sit here if you're wanting to buy a house. I don't want you on the sideline. I could show you, and when we chat, I could tell you how folks are still winning right now. And you could see it when we just talked about March pending contracts. We're up. Home appreciation, up. But remember, real estate is local. Sounds mean, but I don't care what's going on in North Dakota or the state of Washington or California. I care about what's going on in the markets that I lend in. And that's what we want to help you make sure you're winning. Let's have a conversation. Don't just sit on the sideline and go, oh, this stinks. Because somebody else is sitting there talking about, oh, you can't time the market. But what I can tell you is your home's going to go. Real estate is a wealth-building tool. It is a marathon, not a sprint. We're not talking fix and flips right now. We're talking about buying a home and building wealth. All right, so we've been taking you on the home buying journey, our home buying university. We've been doing the webinars. And I think as we go, not think, I know, I see this daily. And Gumbo Nation, and this is, again, why you trust me. And so many of you call and go, and that's why, look, we've started helping with listing homes. You're like, you know what? I trust you. I buy into what you're saying. And I cover these topics because sometimes I see things and I don't have hair anymore because of stuff like these topics, of what I see. But it's so important that I share with you what I see to make sure for that brave home buyer, and buying a home, it's brave. It is your largest investment and most valuable asset. That takes guts. And while the thought of it is stressful, my goal here at Mortgage Gumbo with my team is the process doesn't need to be. So that's why we just took you through the home buying journey, and now we want to kind of go over, because we talk about, right, oh, these folks who are cancellations and all these things. I want to kind of cover with you. And how do you put these safety nets? How do you make sure that you are protected? And they're called contingencies within your contract. And a simple one, obviously, is a financing contingency, right? Unless you're paying cash, then you need to have a financing contingency in there. And what that means is you need to know what program, what loan type are you going through? What down payment? You don't want any surprises as you're going through and getting the loan done. Now, if something pops up, I don't know, some crazy way, can we pivot? I hope so. Right? The seller, if we write a contract and we write it for a conventional loan, and somehow we got to pivot to an FHA. If it's not affecting the seller, they're not going, hey, where are we at? As long as we don't miss the closing date. But you want the financing contingencies in there. Hey, rate not in there. Part of the contract is going to say what type of loan, how much down payment, rate not to exceed what. So you have an idea. These are your financing contingencies. Again, just think safety nets. Okay? You're going to have a title contingency. And this is always going to be included. You never want to waive this. You want to make sure that you've got a clear title. You want to make sure that some long-lost family member can't come back down the road and go, hey, I had 1/3 interest in this. So we're going to make sure that that title is clear. We're going to make sure that when you buy that house, it's yours. Nothing else can come back. The chain of title shows all the owners or whatever it's been, and now it is yours. And we're going to make sure that that's clear. All right, on the other side of the break, we're going to get into some big ones. Some big ones. We're going to talk about appraisal contingencies, inspection contingencies, insurance. So don't go anywhere. We got one segment left. You don't want to miss this. These are some big ones we're going to be covering on the other side of the break. You're listening to Mortgage Gumbo with Dwayne Stein right here on iHeart Radio.
I can hear your music playing.
Welcome back. Mortgage Gumbo with Dwayne Steiner right here on iHeart Radio. Hey, home away from the show, 504-207-7600. Or go to info@mortgagegumbo.com or go just visit the website, mortgagegumbo.com. All right, we're discussing safety nets here that are going to be put into your purchase agreement. And they're also called contingencies. So the next big one I want to talk about is the inspection contingencies. And according to NAR, National Association of Realtors, 80% of buyers usually include this contingency in the contract. But listen, I want to make sure I'm clear on this. Very clear. As a lender, we recommend an inspection, but we don't require it. Let me repeat that. We recommend, but we don't require it. Meaning, I don't want to know what's wrong with the house. Now, if you want to send me over a copy and we have a discussion and you know, that's usually something you do with your realtor. I've got no problems going over that with you. But this is usually in there. It's when you sign a contract, it's usually 10 days inspection period for you to get somebody out there. They check out the property. They send you this big, thick report back. It's going to scare the heck out of you. But a lot of it is just kind of, it's taking a little bit of the makeup off the it removes Cinderella, so to speak, right? But a lot of it might be, hey, possible fire hazard. And I use this one all the time because it read just like this. Possible fire hazard in master bathroom. Well, that sounds horrible to somebody reading that. But then you look and it's the GFI outlet needs to be replaced. Okay, well, that's $10. But that inspection contingency is, again, recommended, not required. However, that is a huge one. That is when we see if it's lipstick on a pig, if it's just we're painting over something. So they're going to get under the house if it's a raised house. In the attic, they're going to look at things. How's the AC working? Any work that's been done, is it quality? And this is a very, very important contingency to have. But you only get this once you're under contract, right? So get under contract and see what happens then. And a lot of times you could use those inspections to get things replaced, maybe get some additional, did one this week. The seller's like, look, I'm not fixing this, that, or the other. It wasn't a big list. It equaled about $1,800. And the agent, both agents came together, did a great job. And we go, hey, we're going to put it towards their closing costs because the buyer had some additional closing costs that we could put it towards. If we've used up all the seller concessions, the amount legally allowed, well, then, hey, we'll reduce the sales price. Or sometimes something will be held in escrow, et cetera. But the inspection contingency is very important. Another one, appraisal. Listen, unless you are paying cash, then there's going to be an appraisal contingency with lending. We can only lend you what it appraises for. Now, if it appraises for more, got one this morning, came over, appraisal, $30,000 over. This is, again, a great buyer who said, you know what? I'm ready to buy now. I think now's a good opportunity. Praise for $30,000 more. We're not going to that seller and go, hey, and guess what? The listing agent don't want that either. They don't want to go like, hey, we left money on the table. But with that, when that comes into play is, let's say that house you're buying is for $300,000 and it comes in at $295,000. Well, we can only finance what it appraised for. Now, if you really want that house, we're going to do the loan at $295,000 versus $300,000 now. Maybe you come in with the additional cash. We saw that a lot in 20 and 21. People overpaying. Not overpaying, but paying above list price. So that is when you're looking at that. That is a huge one because we can only use let. Now, what you have to understand as the buyer is, hey, at $300,000 they were giving you $10,000. If it comes in at $295,000, maybe they can only give you $5,000 now. Does that work? Got a call yesterday from a client. Sent someone over, working with another lender, and appraisal came in short.
2 minutes.
Seller's not willing to pay the closing costs. So they're like, is there anything you could do? I'm like, well, no. I'm like, do you have the money? Do you have the means? Is there any, can you get a gift? They're like, no. We just had enough money for the down payment. We can't do this now. Like, that's you and the agent, y'all got to get together there. Was there a plan? So that's why appraisal contingencies, inspections, very, very important. Financing. And then, of course, last but not least is insurance. Right? If you have a loan, and if you got more than 80%, less than 80%, you don't have to escrow. But if you've got a loan, you're going to be required to have insurance on the property.
1 minute.
So that insurance is something that when you're looking at, we've got to get that taken care of. Or flood zone. Or you're in a flood. We've got to make sure those are all contingencies. These are, think about them as your safety nets. These are your outs, right? This is my largest investment, most valuable asset. How do I get out?
30 seconds.
And those are all the things that we just shared with you there. Hey, your homework this week, go out, tell one person about MortgageGumbo.com. If you're unsure, they unsure, look, you got a guy. You don't have to be the expert. Say, I got a guy. And have them give me a call. Or go to MortgageGumbo.com. We've always got somebody standing by. So next week, Gumbo Nation, keep stirring the pot.